Welcome back, everyone, to another episode of Living Your Greatness. This is your host, Ben Mummy. And today I am joined once again by David Morgan from the Morgan Report. So, David, good to have you back on the show.
Ben, it's good to be back. Thank you.
Yeah, awesome, David. David, looking forward to chatting with you. Today, I'm really excited to create a conversation that I think you've been advocating for a while, which is 10 rules for investing in silver. And I think these rules, from what I understand, were inspired by 150 of the world's most brightest financial experts. So it's not just your opinion, but much more than that. So today, my goal, David, is with you is to create a conversation that I think will help millennials thrive and make smarter investment decisions when looking at silver. So to start off, from these 10 rules, there's a lot. The first one I want to start off with is obviously number one. So I know that rule is when all else fails, there is silver. Can you tell us about that rule?
Sure. And I don't have them in front of me, so it's from my memory, but I wrote them and I've talked about them in the past. So the first rule is when all else fails, there's silver, and it goes something like this. No one wants to be a prophet of doom. But in the unlikely event that there is an all-out financial collapse, silver will be the money of last resort. Not gold, because it's got too high a unit value. So for everyday purchases, you would use silver. And therefore, every prudent investor should have some silver close at hand. So that is the absolute worst case. Am I predicting it? No. But I want to add on to it, Ben, because that was written about 20 years ago. And the investing rules book sought out like the top of the top in all areas of investing. Mutual funds, insurance, master limited partnerships, options, all that. And they asked me to do silver, which was an honor in a way. But when I wrote that, there wasn't the digital currencies that we have now, or I should say the blockchain-based assets. And now that we do, there's an easier way to move gold and silver around, and that's through the blockchain. So, had I written this rule in the last few years, it would have been slightly different, because you could put money in a depository and spend it, through a debit card or whatever. But silver is the money of last resort, believe it or not. And most North Americans don't warm up to the idea, but anyone in South America, Mexico, most of the East, China isn't too hip on silver anymore, although that's an impression after being in Beijing a week and Hong Kong several times. But regardless, it's an industrial metal, and it's also a monetary metal.
Absolutely, David. I'm happy that you added that other detail just in terms of where we are today and with blockchain and how there are, I know, silver-backed ones as well as gold. And I know last time I had you on the show, you actually spoke about one. I want to move now to rule number 2. And so that one is start small, keep it simple. So what did you mean by that rule?
Most people overdo it, especially if they get excited about the truth about fractional reserve banking and the fact that all fiat fails. All the fiat currencies that have ever been recorded have failed at some point. And so they decide that they need to get into gold or silver or both, like right now. And they don't really take what I suggest in that rule. It's probably the most important rule, in my opinion, and that is take a deep breath, calm down, start small, keep it simple. I know I'm repeating the rule, but if you're going to buy silver gold for the first time and you're going to put in 5,000 or 50,000, 100,000, or even 1,000, take that base and start small. So if you're going to do 5,000, buy 500 from a dealer, an online dealer, someone that's in your town. Most bigger towns have a gold and silver dealer, unless you're in it depends, but usually if you're in 250,000, 500,000 or greater, there's usually enough competition that you can find a coin bullion dealer in your area that's pretty fair on price. And they've got competition because you can always go with your phone and say, well, wait a minute, such and such on the internet selling silver for this. Can you match that price, or that kind of thing? So get used to doing it, see how you were treated, see how fast you get your metal, see how it was packaged, see how easy it was. Did you have to sign for it? All those things. And that and you might try from a couple dealers or three even. And once you start small and keep it simple, it relieves a lot of pressure, because I don't know how many calls I've had over the years of people that got talked into the wrong thing, bought overpriced material, didn't realize it until after they'd sent in half their life savings, and then regretted it. So you've got to be, you don't want to make a rookie mistake. And the best way to not make a rookie mistake is you don't swing for the home run, just, bunt the ball and learn, and then move on. One other thing I want to add, Ben, that no one really ever talks about, and that is the allegiance to certain dealers. Most people, once they have made a transaction, big or small, and it's fulfilled, won't change dealers, because they know that that dealer's honest, they got their metal, that kind of thing. Now, some dealers, such as Northwest Territorial Mint, as an example, was always horribly delayed on their delivery. And of course, they're out of business now. There's some fraud involved. I won't go into the case, but and that's another reason to start, keep it simple. I mean, if you ordered from them your first time, because they had the lowest prices, they advertise the lowest prices. So, I'm price shopping. But then it's 3 weeks, 4 weeks, 6 weeks, 10 weeks, and you haven't got your metal. That's a red flag. Back to you.
Absolutely. And I think rule number 2 is very, very key, especially for my generation, who seems to be more impatient than your generation, more trading based, especially something like this when it's silver and the bullion, to be more patient and do tranches, right? So, I'm happy that you mentioned that one. I want to move now to rule number 3, which is boost the buying power of your dollars with mining shares. So what do you mean about this one?
Well, again, this is, 20 years old, but I've always advocated real metal first. In fact, I don't want anyone on our premium service that hasn't at least bought some precious metals or are going to buy it, because that's your foundational base if all else fails, as I said. But you can get leverage into mining shares, but most people pick the wrong type, because in my business, most people that write or promote a gold newsletter, silver newsletter, not all of them. Silver's a little better than some of the gold guys. But anyway, they promote very risky investments, whereas if you pick the right ones, which I learned the hard way, they could do quite well. So I'll give you a quick example. My top pick in a royalty company, when gold was at 2000 in 2011, this stock was about $50. Gold is almost there again, but the stock is up 300%. And this is a big stock. This is where you put in big money and be safe. Another one would be Silver Wheaton. And Silver Wheaton went straight up, just like silver went straight up when silver went from $9 to $50 and peaked out the last day, first day of May 2011. And if you would have bought Wheaton and silver at the same time, your silver would have been $50. I forget the price of Wheaton, but the point is, even though silver is less than half that price, Silver Wheaton is at a higher price today than it was when silver was $50 an ounce. So that's another example of getting leverage in the correct mining companies. Very few do what I do in the industry. And again, I learned it the hard way. Some of this information is, you can obtain on your own. You don't need me. And we do speculate, but when I speculate, I bet money I can afford to lose. If you follow the rules that I've laid out in the Morgan Report Premium Service, you're not going to be the richest guy on the block. You will be happy. I mean, even when silver and gold were not doing much for a long time, we had a resource company that still went up, tenfold, Kirkland Lake, and that's pushing Kirkland Lake, and nothing else is doing well. So, and it's going to get better and better. I mean, if you want to gain leverage in the sector, now is probably the time to get in, because we are facing, more of the same with this banking crisis.
Absolutely. Yeah. And I think you brought up some good points there. There is a lot of speculation in this industry, especially when you look at, junior mining, to high risk. But kind of like you said, there are ways, with certain, companies, if you've done your due diligence and said no, probably 99% of the time, and look for that 1%, because it's so small for that, is really where you can do well, right? And find those safer bets. But again, it takes a lot of work, takes a lot of homework, takes following people, the right people, right? So I'm glad that you brought up those examples. I think it's important for my listeners to be aware of that and be cautious. I want to move now to rule number 4, which I think is key for a strategy. And this is dollar cost average to lower your costs and increase your discipline. So what did you mean by this rule?
Yeah, you can look it up on the internet. I think I can explain it fairly easily. And it could be dollar cost average, it could be Aussie dollar, Canadian dollar, it could be any currency. But what you do is you have a goal. And the goal is, for example, 5% of my net worth is going to be in precious metal. So that's a number for everybody. And what you do is you take that number and you look at it as a goal of 1 year, 2 years, 5 years, whatever is right for you, and you set aside a savings plan of, let's say, $100 per month, and every month you put $100 in, we'll say silver and gold, or gold, platinum, but you pick one or pick two or three, and you just put in faithfully that $100 every month on the first of the month, and you do it month after month, year after year. And as long as you are in a bull market, you will have two things going, well, two or three. One is discipline. So you'll be taught how to save. That's one thing I just naturally did as a kid. I don't know why. No one said to do it. No one taught it to me. I just did. I always saved. And then when I read The Richest Man in Babylon, and they suggest saving 10% of your income, that revivified what I'd already, intuitively figured out for myself. And so that's a really good way, because it not only teaches discipline, it takes a lot of emotion. Because if you buy into the gold and silver story, which everyone really should because of the fiat fiasco we're in, then in the longer run, you're going to be, you're going to be right. It's going to be something that you can fall back on or use to, better your lifestyle or maintain your lifestyle. So I really like that approach. I don't do it continuously. I do it and I don't. I have a affiliate program with a few guys in the Midwest that have set up theirs, and there's many that do this, by the way. And you just do that. You just give them your bank account on your check, and tell your bank you want to deposit $100 every month into this facility, and then you will just stack your silver. And in this particular instance, this was you can't get delivery, and I do. I wait every about 6 months and I take delivery. So there's a lot out there, but I really like that approach. Can you do it with stocks? Sure, you can. You don't have to. In fact, most people that may want leverage in the market, like we talked about rule 2, find a good mutual fund. You don't need me. I usually beat the best gold fund managers, but not by such a large amount that it's worth it or not. I mean, it depends on the individual, but you want to keep it simple. You can find a good mutual fund that's a gold specialist and just dollar cost average into that. So you could do both. Back to you, Ben.
Awesome, David. No, I appreciate that advice. I want to move now to rule number 5, which is do not get a raw deal from your dealer. So could you explain that one? I think that's very important.
Yeah, the kind of what I wrote, again from memory, was don't get a raw deal from your dealer. Most people shop price, and price is not always the best thing to shop. I know many dealers, and now even more, that have gone out of business by trying to promote a price that was unrealistic. I used to write a little bitty, one pager on what dealers I was recommending. This was, again, probably 20 years ago. And I took it off. It was very much worth the money, but I got too much blowback from people that knew more than me. And I'm not saying I know it all, but I'm a seasoned investor. I've been in the market a long time. So Tulving was one, and they're out of business. As I just said, Northwest Territorial Mint, they're out of business. There's been a lot of these companies that have the lowest prices, but you're getting a raw deal, because you get a low price and you never get delivery. Then what have you got? Nothing. So you want to find a dealer that's been established. You want to find a dealer that you can trust. And even if you make a mistake and you start small, and you're going to put in 5,000 and you put in 500, and you don't get delivery, or delivery's 10 weeks or something, you're not ruined. You got 4,500 more to invest, and you can find a better dealer, and you can also, keep it small the next time. And this is very, very critical because, again, I've seen so many people get burned by shopping price.
Absolutely. And I think it's key that you tie that into rule number 2, just because, again, if you start small, right, like you said, that, it won't hurt you the same way if you went all in, right, and you went overly eager. So I appreciate that. I want to move now to rule number 6, and I find this one interesting, but what's yours is yours. So keep it that way. If you could explain that one.
Yeah, it's just something you've heard over and over, Ben. If you can't hold it, you don't own it. And that's basically what it says. However, there is a modification to that for yours truly and many of clients, the Morgan report, and that is when you start stacking silver in quantity, it can be sizable and you might need to store it. So I do store some. I suggest 3 locations. And some people are uncomfortable having it in their house or their apartment. And so they want to store it. They want to put it in a bank. They want to put it in a storage depository. And I can help with that. I mean, anyone that's interested in finding a good storage facility, I'm not going to name it publicly because it's a pretty private company and it is not bank related. So if you want to learn more about that, just just give us an email, support@themorganreport.com, and let me know that you want to know about a facility. No obligation. It's someone that I store with. So that's it. But no, if you can't hold it, you don't own it. But if you own 50,000, 100,000, 150,000, it might not be such a great idea to have it all sitting in your house or your apartment. Depends on the person. But the rule is you really do need to make certain that you have a good storage facility if you're going to go that route. Banks are okay, but in a banking crisis that we're now in, you could be, depending on the state, in a situation where the bank closes its doors and they have access to your safe deposit box. So I used to use banks a lot when I was young. I haven't used a bank for storage of metal for a very long time. I do not recommend it. But if there's, depending again on your state, you have to look at your state law. It may be safe, and it depends on you. If you're really worried again, and you're happy to put it in the bank, safe deposit box, then certainly do that. So I'll leave it at that.
Awesome. Sounds good, David. Something that I want to move to is, number 7, right? Rule number 7. And I find this one humorous, like the way that you wrote it, but I think it is very key. So it was silver speculation is like cough syrup. It's good in small doses, but too much of it can make your portfolio sick. So what did you mean by that?
Well, it goes back to the rule 3. I mean, if you're really going to invest, first of all, there's a lot of people, and these what I'll call seasoned investors that have been in the market 10 years or more, that don't really understand the difference between speculation and investing. If you invest, what you're looking for is a major macro trend. And you want to ride a horse or horses, and not very many of them that are going to participate in that major trend. And so when I suggested the stock I told you that tripled while gold has done nothing, basically, that's an investment. I put money into that company at like $19 a share, and now it's like 140. And so I've been in that for a long time, and it just keeps going up in a general way, but it goes up and down. It fluctuates with the gold price, fluctuates with some of their, mining associations and all that. But that's investing. You buy it, it's good, you sleep soundly at night, and it just keeps getting better and better over time. Very few gold stock equity products do that. Most of them are speculative in nature, the junior mining companies that get touted a lot. And so if you put most of your money in the juniors, you are making an odds that is highly against you, because only 1 in 4,000 juniors ever become a mine. So yeah, 1 in 4,000 is better than the state lottery, but it's still 1 in 4,000. So There are some that hit, and we do it. I don't think I could have quite the subscriber base I have, which is pretty modest, if I didn't do some speculative investments. But that's where, really we've done the worst. I mean, in the beginning I did really well. That's another story. I won't go into it, but we had Penasquito, and that was like a 10 bagger. We had can't remember the name. It was a copper company, and then it became a silver company. We had several that did really well, but after about the first 5, 6, 7 years, the market basically hit a peak, especially in the junior sector. But that's the idea. You want to have. So what I teach in the Morgan Report is 70% goes into top tier, cash rich, unhedged company. 20% goes into mid tiers that have a good growth profile, but they're a little riskier, but they might have better capital gains. That's the point. And then the last is about 10% in the speculative companies and money can afford it. And if you follow those parameters, you're probably going to do well. You're not going to beat the guy that gets lucky and buys that one out of 4,000. The stock goes from 12 cents to, $12. But that's, again, very, very rare. And if that one person or cocktail party person that you meet randomly tells you that, okay, great. But, talk is cheap. Sometimes people do it or sometimes they don't. But that's it. I really, and this is my kind of my one of my pet peeve with the industry, and trying to talk about it in a general way. There are some out there that are highly regarded in my industry, as they should be. But what they do is talk about, juniors, and juniors, and how well they've done. But what they don't tell you is, as Paul Harvey would say, and that's probably someone you've never heard of, the rest of the story. And the rest of the story is what the public really needs to know. These people are not buying junior mining companies like the average investor has to do. They are financing junior. That's a whole different game. When you're on the financing side, you have a distinct advantage that the average investor doesn't have. So if you say you love juniors, and you are a financier, you're in a whole different ballpark than if you're just buying juniors. So I want to make that clear. And this is something very few people teach or talk about. And I've done lectures on it. And every time I've done like 2 or 3 times at the most. And each time I give that lecture, Ben, people fall asleep. They don't care. And yet I'm giving them, I think, advice that will really keep them from getting hurt. But so be it.
Yeah, no, I'm glad that you brought that up, David, because I think too, another thing, right? Like people always talk about their wins, right? And they never talk about their losses. But then even on top of that, you just told us another bias, that, general investors or retail investors like myself aren't always aware of, right? And so I'm happy that you brought that up. I think it's important for, this conversation and for people that are tuning in to hear that. And the next rule I want to move to is number 8, which is a little bit of information can mean a lot more dollars. So what did you mean by that?
Well, this sounds like selling my own book. So I'm selling my own book, people. So I'm biased. What I mean is, what we've talked about. I mean, why juniors are a lot riskier, and you have a good chance of going bankrupt if you buy nothing but juniors. But if you weight your portfolio where you've got a stalwart that just, triples in 10 years, well, that's fine. It's not like doing Tesla, right? But it is a steady eddy that is going to keep you wealthier over time and getting sleep well on that. So that information is very valuable to someone that's serious about investing in the resource sector that wants to make money, and they're serious about it. So where do you get that information? Well, you can find it on your own, or you can, subscribe to a service like mine or not. But the other one is what we talked about earlier, Ben, and this one's kind of key. So during the 2008 crisis, I got a few consultations. And then in the 2020 dip, I got a few. And then recently, I've gotten a few. And the conversation basically goes like, I trust you. And I've got $1 million in the bank. I've never bought gold in my life. I don't want to make a mistake. What do I do? So that person pays me $1,000 an hour, and I cut it in a half-hour block. So he's paid me $500 to talk to me for a half hour. And that's a lot of money. I admit it, but I'm worth it, or probably worth more. Sorry, I had to throw my humor out there. But what did I do? Well, I gave this person a dealer that would save them thousands on their purchase because I could connect them to someone that's very close to the wholesalers. So that $500 comes back many times. And they can circumvent that rule about start small and keep it simple. They're worried. They want to get down to $250,000 in their bank account because of the banking crisis. They're only insured. They want to put $750,000 into metals, divide it up, talk about what's best for them, and then they make they make the deal happen. And so this little bit of knowledge can help people a lot. And everyone that I have had that conversation with has come back and said, thank you. I haven't had one yet that been unhappy. I could go on, but that's the general idea.
Yeah. And I think it's good that you shared that story, with that client, because, your circle of competence of knowledge in this industry, you haven't been in this for a year where it's your first year and you're just interested. You have years and years of work that you put in for where you are today, right? So
That's right.
for you to help them with the blind spot, and get them somewhere quicker, and not have them make that long journey of mistakes to get there, or luck where they just happen to make the right choice. So yeah, no, that's awesome. Glad that you mentioned that. The next rule I want to move to is rule number 9, which is collecting silver is an art, but not really an investment. What did you mean by that one?
Yeah, that would take some explaining. I'm talking about the numismatic collectors, people that collect rare coins. So it used to be a lot more prevalent than it is now, but in the earlier days in the 70s, it still happens. When you are a novice, or even not, and you call up your local dealer or one on the internet and you say, I want to buy gold, they immediately have a pitch that they've practiced 1,000 times. Says, Ben, you don't want to buy gold. You want to buy rare gold. Well, why is that? Because if you buy gold bullion, it's going to get confiscated and the government's going to take it from you. But if you buy rare gold, you're protected from having any confiscation. All that is pure hogwash. None of that exists. And they used the 1933 gold situation, but it wasn't confiscated, by the way. Gold was nationalized. So you were paid for your gold at the going rate, which was $20.67 an ounce. And then after the government collected the gold at the going rate at that time, then they changed the price. So it wasn't like they took your gold and didn't compensate. Now you got screwed. There's no, ifs, ands, or buts about that. However, it wasn't like it was confiscated. That does not apply today. So rare coin collecting is something you can make money. I probably could rewrite that slightly, but it's almost a full-time job, or you have to have a broker that really knows what they're doing and really has your best interest at heart. And there are a few of those. In fact, I know a couple, and I do have a few rare coins, but very few. I mean, I bought a box which is 20, 65 grade silver Morgan dollars for my kids. I bought 2 of them. I've got 1 or 2 gold pieces, but if you want to do that, that's fine with me, but don't think of it as something as a real gold investment. Bullion investing, gold coin, bullion coins, bullion itself, those are what we want because you get the most gold for the dollar. If you want the other ones, then be advised, really do your homework. And don't get talked into it. Going back to, making that big purchase, I had another call, try to be brief here, Ben, and the guy called me, and it was a younger Chinese guy, probably about your age, and he was pretty upset. His parents had come from China, moved to the U.S. permanently, called a coin dealer, put in $500,000, and once the guy on the other end of the line realized the amount, he put him in a semi-numismatic coin, which is kind of BS. Gave him a 40% premium, and that's very typical in the NUMI market. The average grade on a NUMI coin, excuse me, the average premium is usually 35%. So if you're buying XYZ coin in a holder and it's worth X, you've got to get a 35% move up before it's going to break even. It's like, here's a panda. All right. That's one. It's just, why do I have any of these? Because I enjoy having it and it's rare. And, that's something that'll be really cool for my granddaughter at some point, but it's not something to make a habit. So probably overtalk that one. Thanks.
No, all good. I'm happy that you showed that as well as gave that story, because it reminds me of even like art, like certain art could.
Yeah, it's again, I'm sorry to interrupt, but if that's what you really enjoy, then by all means. And some of the guys that I will align you with that I trust, I mean, their heart's really into it. And there are times when the premiums come way down. So you can buy those rare coins for a reasonable premium, maybe under the normal 35%. And so if you follow the market, but it's not something I follow really closely, but I do have friends in it. And I could give you some guidance, but it's a whole different investment field. It's an art collector rather than a bullion investor. That's what it boils down to.
Totally. No, for sure. David, I want to go to your final rule now, which is more than 10% is too much of a good thing. What did you mean by that?
Well, again, people hear the gold silver story. They realize they've been screwed by the fractional reserve banking system and they say, I'm going all in. That's too much. I did up it to 20%. It's individual. I mean, some people are happy with 5%. Some aren't happy till they're at 30% or something. I myself am above that, recommended level, but it's my business and it's where I feel the safest. But you got to balance your portfolio. And this is something that needs to be emphasized. I mean, you look at some of the really well-followed, well-respected people in the industry, and there are many. I mean, you look at Jim Rickards, he talks about 10%. I'm not sure what Dr. Doom would say, Robini, but most people are pretty conservative because it's a non-yielding asset. It is the money of last resort, and it's a wonderful hedge in a portfolio. In fact, the best analysis done on it is by Ibbotson and Associates, and in their study, in good times, bad times, and not in between times, 15% was the correct mix of precious metals, not mining shares, metals itself. So if you were going to an AI and say, develop the perfect portfolio for me, I'm a millennial and I want to retire very comfortably when I reach retirement age, what do I do? It'll tell you, put 15% in precious metals.
All right. Yeah, no, that makes a lot of sense. And again, I think it's just, not putting all your eggs in one basket, right? You shouldn't do that for any type of investment, right? So,
right.
I'm glad that you kind of explain that. Also say, where you made some changes. So David, are there any bonus rules that you want to add to your 10 because, you wrote this a while back? Any bonus rules?
Well, I'd say, 11 or whatever is, money's important, but don't make it your main focus. I mean, it's my main focus because it's what I choose to do for a living. But nature preaches balance. So I would say, have fun, enjoy investing. You're going to make mistakes, learn to roll the punches, correct and continue. You bought a bunch of Numis and you didn't know any better and you feel bad. Get over it. Yeah, sell them back or sell some or keep them and move on. Just keep going. And that's, I think, an important thing to bear in mind because money, again, is important, but it shouldn't be the sole focus. Unfortunately, in these trying times, I just looked this up because I'm going to be making a movie on, the money problem, I'll call it. And so I looked it up on one of the search engines, and the biggest stressor in the United States, 87.5% of the population of the U.S. stresses about money. That's pretty sad, and supposedly or purportedly the richest country in the world, which I doubt that's true, but let's just say it is. Why would almost 90% of the population be concerned about money if it's so rich, right? It's sad. It's very sad.
Oh, absolutely. So David, The next thing I want to go to is I know you've helped a lot of investors, all types, but I know you've worked with some high profile investors. So, for the benefit of my audience, what do you believe separates a good investor to a great investor?
I think the great investors are more long-term oriented. As I just said a moment ago, they're able to take a loss and not spend much energy on it, correct and continue. I also think that they take a little more time. One of, a couple of adages that I use, especially trading futures, which I do very rarely now, but I used to do it all the time. The adage is, when in doubt, stay out. So if you're not exactly sure that the real estate market is bottom, stay out, unless you have to have a home. I mean, there's a little tweaking on that one I don't want to go into, but generally speaking, any investment, if you're not sure it's at the top, the bottom, or in between, and no one can pick the bottom exactly or the top exactly. Most professionals do something, or great investors, rather than pick a top or a bottom, wait for the trend to be established. And that's what I teach with the Morgan rule. And it's a rule that my premium service knows. I've said it in public a few times. Basically, I don't know as much as the market. The market always knows more than me. So if the market tells me something, then I can take action. So that's kind of what a great investor does. A good investor usually is someone that finds someone that is good at a money manager or something. It's got a great track record. I mean, you look at my mom, she and my dad years ago found a outfit that's done well over the years, kind of a philosophy similar to theirs. I'm not looking to get rich quick. I'm looking to not lose anything. I want to grow it slowly, carefully, but assuredly, over the next 20 years, that kind of thing. And that's good for a lot of people. And these very trying times, it's important, again, for me, and I'm not a bullion dealer. I want to make that clear. But buying real metal and having it close at hand could be critical, especially as we start to go into this very unwielding time frame where we really don't know exactly how the banks are going to sort out what's going on and what the new financial system will look like exactly.
Especially, yeah, no, I'm happy that you talked about both of those, both the good and the great, because there's nothing wrong with, if you're striving to be good and, have a professional help guide you, there's nothing wrong with that. You don't have to be, if you're not that serious at getting good and understanding and enjoying the process, like your rule number 11 that you just added, that's okay. Right. And then, but if you are striving, I'm glad that you spoke about the other side, of knowing when to buy, looking for what's happening in like the market. So I'm glad that you kind of, mentioned that. Thanks, David. David, the next question is more a fun one. I'm curious to know, I didn't ask you, the first time I had you on my show, but who are your greatest mentors, and where do you suggest, millennials like myself, these young bucks who are trying to learn more and who are curious, where do you suggest we go to learn more from some of those investors or mentors that you've looked up to?
Sure. I would say probably at the top of the list would be Murray Rothbard. Good primer is, what has the government done to our money? Murray is one of a kind. I mean, he could type out stuff and just super clear about the economic conditions and why statism, as it grows, continues to take away our freedoms. So I would start with anything from the Mises Institute. Lou Rockwell is in charge of it now. I've only had the pleasure of meeting Lou one or two times. Brilliant man, good heart. So anything in the Austrian school or Mises.org, I would suggest to get on their mailing list, read an article a day or at least one a week, and become familiar with the only economic teaching that's pretty based on reality. Is it exact and perfect? No. Economics is not a science. It is an art. It is not a science. I mean, you can have the science of compound interest. You can figure out what the net present value is and all that stuff. But economics is based on what people do. And you cannot predict 100% of the time what people will do. It's impossible. Another one would be Harry Brown, Browne. Harry was a mentor I got to know later in life. He ran for the Libertarian presidency 2 times. I got to sit next to him and have dinner with him and talk to him many times. And he, to me, was a commensurate, not only very intellectual, although he didn't come across that way maybe, but he came across with a very gentle manner that I'd like to duplicate. I mean, as you know, when you see someone, and he would get people that he would do like one-on-one interviews with, you could still find some on the internet. And he would never say, you're wrong, or that's, he would just in a very gentle way do, I guess, the Socratic method, where he would ask a question and another one and another one. And all of a sudden, he's got this person turned around, realizing that you can't get something for nothing. Somebody's had to pay for it. And, and it's just amazing to watch some of his interviews. But he was a stalwart in the early days. Another one would be Jerome Smith. Jerome Smith, I'll call the Silver Guru. Back when I was your age, Jerome wrote many books. Well, here's the first one he wrote. I just happened to pull out of my basement files, called Silver Profits in the 70s. It's really more of a pamphlet. It's paper covered. And then he wrote Silver Profits in the 80s, What's Behind the New Boom in Silver. The best book, in my opinion, he wrote is called The Coming Currency Collapse. And if you read that book now, give you a very good feel for where we are. Many of us in the early days thought that the currency collapse would happen, in 1980. I mean, when gold shot off and silver shot off, we were pretty close to a currency crisis. And with Volcker stepping in and having the guts to move interest rates up so high, he quelled the markets for years. For 20 years, gold and silver basically did nothing. And then in 2000, gold started its new bull market. But I got one more. So Mises, Brown, Jerome Smith. And there's another one. I'd have to look up the author, but the book is called Money, Ye Shall Have Honest Weights and Measures. And it was consider him a friend. I think he's deceased now. And it goes through the legal definitions of what is a bill, what is a note, what is usury, what's the difference between certain legal terms. And then it also is a beautiful coffee table type of book with beautiful art in it. And you're not allowed to photograph currency without permission. And he got permission, but instead of shrinking them down, what most books have, he expanded them. So you can really get some of the artwork on some of these old, gold notes and silver notes are incredible. But it's quite a good book to understand the legal basis of money versus what we have now.
Well, David, thanks for sharing all those names. Very generous. Something that I admire, about mentors is sometimes there are some things that don't change, even though things are always evolving, like especially in the investing world, how much it's changed. There are some fundamental, mental models or kind of practices that I think are important for investors, to kind of keep in mind and kind of have that engraved in their strategies, So I'm happy that you mentioned, those individuals that have had an impact on you. Really, really appreciate that. And something that I want to move to, David, is, I know you were also a high level athlete. You were a swimmer, you competed at a very high level. I don't know if all my listeners actually know that about you or other people that follow your work. And it always takes a champion mindset. And so, my podcast is, really striving hard, to inspire millions of people across the world to achieve greatness and enhance their overall well-being, whether it's investing, whether it's in sports, whether it's in knowledge, So my question to you is, what is your definition of greatness?
I think the best definition is the Oracle of Delphi, to thy own self be true. Not all of us can be great athletes or great investors or great anything. Just being a great person is a real achievement. Being a great parent. If I had to trade everything because I was like, if I was given the choice that you can have all this stuff or be a great parent, I'd push all this stuff aside and take the be a great parent. So to me, greatness is being true to yourself and living within your means and having a long-term look at things rather than this instant gratification that our society has been developing for a very long time. You know, the see it, buy it, shiny object gets dull, throw it away and buy another. I mean, that's okay. I'm a free market thinker and people, do what they want for the most part. But I am really thinking that greatness has to do with what you become. I was asked something similar, and I'll say it this way because I took this from one of the new philosophers, we'll call them. And what he said really rang true in my personal life. He said that becoming a millionaire is, a worthy goal. But when you become a millionaire, what you will find is what you learned becoming a millionaire is the more valuable lesson than attaining the $1 million. And I found that to be true in my own instance because, having a business, meeting people, doing lectures, people on the street, whatever. And when you go through the ups and downs, I mean, it wasn't like every investment I made turned out to be wonderful. I did have some hits, but learning what I learned is at least worth $1 million because I learned things about myself and I learned how to be better. My sister has an expression: as you get older, you have one of two choices. Now, this is just what she says. You don't have to buy into this, but you become better or bitter. And we see some bitter old people and we see some better old people, Who doesn't love the, 80-year-old grandma that's, got all the cats around her or whatever. I mean, I'm trying to make a metaphor, but so that's it. Probably overtalked it, but I really do think what I would like to leave with, and I know there's another question or two, is personal satisfaction is more important than the amount of money you obtain. In fact, one of the best lectures I ever heard came from Earl Nightingale, and you can look him up. He used to be cassette tapes, and they had these lessons, and there's one on success. And when I listened to that tape, it really settled me down. It's probably about your age. And that success is all about how much stuff you could collect, how much money is in the bank, how many cars you had, that kind of stuff. And when I listened to that success tape from Earl Nightingale, I realized success is really by your own definition. If you are a successful parent, and that's important to you, then you are a success. You can be a very successful janitor. You can be a very successful, grocer. I mean, so you don't need to adhere. And I've always thought outside the box. I don't know why, I just have. And you don't need to bend to society's pressures. I mean, I still, feel them or, maybe blindly follow stuff. I don't think so, but perhaps I do. But again, to their own self be true, define your own success. That's it. Maybe success, let's take someone your age that's still an athlete. I'm not saying you're not an athlete. I don't know where you are in the athletic spectrum right now. But their goal is to get up to this certain mountain, to climb that mountain. So it's not how many cars he got or she got. It's not how many trips they made. It's not the vacations. It's I'm getting to the top of that mountain. That is success for me. So I think we have to define our own. And I don't think very many people, convey that, but I want to convey it. Thanks for giving me the opportunity.
No problem, David. No, I appreciate that definition. I think it's beautiful. I think it's showcasing that, greatness is from within and also depends on the perspective of that person of what they're trying to achieve, and it can mean so many different things, right? And it can also be moment to moment, right? So, no, I really appreciate that. And I'm glad you enjoyed the question. I want to move now, David. You know what my podcast is about. This is your second time you've been on the show. And a question I have for you is, who is someone that you personally know that you would love to see on this show?
It would be Patrick Wood, Technocracy Now. You type in Technocracy. Pat and I have known each other for quite some time. He used to live up here in the Northwest. He's now in Arizona. I just saw him physically just a couple of weeks ago. And he really clarifies where we are going in the global picture. And a lot of us think it's, fascist or communistic, and it has some of those qualities, but it's really technocratic. And he breaks it down and proves it beyond any doubt in my mind why the technocracy is what's happening to us. And this is where it's considered to be a resource-based economy, and it's run by AI. And the technocrats that started in the 30s depression, along with, when the depression happened in the US, there were a lot of political uncertainties. I mean, the communists were there, you had the technocrats, you had the two-party system still, and the technocrats abhorred politicians. They said politicians don't do anything. It's the scientists and engineers that get stuff done. So we need to have an economic system based on the smart people that do shit, like scientists and engineers. And that was kind of the premise of the technocracy. So I would definitely recommend Pat Wood as someone, especially for the millennials, because, my days are numbered. I don't know how many I've got left. And as many as I have, I enjoy. But it's people like you, Ben, that are going to have to carry the torch and move forward. And to have the best knowledge available to make your decisions is going to benefit everybody, yourself, and everybody you associate with. And you may have him on and not agree with him. I think his arguments are so strong, it's really difficult to not see, behind the veil. He paints such a clear picture and gives, proof. I mean, it's not a believe me thing. It's here's what's actually happening. Of course, with the way the system is morphing more and more into a computer AI driven society with the blockchain, it's pretty obvious that it's technology / technocracy is the direction to go.
Awesome, David. Yeah, no, I appreciate you for giving that name. I will definitely check out the work. You got me really interested and intrigued, to see what he's all about in kind of a deeper context. And David, I want to take now this last moment. You've been very generous with your time today. I really want to thank you for being here. Thank you for making your time again, for living your greatness.
Ben, thanks for having me. I really appreciate you, because one of my goals is to get more and more information to the millennials. I have 2 millennial daughters. I love them both. I have a granddaughter now, and family means a great deal to me. Probably tell from my voice, get a little emotional. But the other part is, what can you do for the greater good? And that is, reaching to the younger people. And it's difficult because a lot of people see me as an old gray. I don't see how they see me. It doesn't really matter to me. I just want to reach out to everyone, especially your age group. That's why I did the Matrix video, because that would appeal to the millennials or to the younger generation. And when I made that video, I remember it finally got done. And I had my daughter, I think she was probably about 14 at the time. And I called her here in the office and said, I'm going to play this. And as soon as you know what it is, I want you to tell me. So I hit the play button, and it was about 8 seconds in. She goes, The Matrix. Yeah, that's right. So anyway, happy to come back. Let me just say to your audience that if you need information, go ahead and write support@themorganreport.com and just put in Ben in the subject line. I'll tell my webmaster to go ahead and forward those to me.